Barron's talking about it too, and that's our call. Joe, why Alphabet could be the best bet among Mag 7 stocks in the new year. It's expected to grow as fast as Microsoft, they say, with earnings forecast to be up 15%. That's 3 times as quickly as Apple's 5% growth. The stock trades for just 20 times, a discount, they say, to both Microsoft and Apple's 30 times, and it's gained 50% this year, but the multiple hasn't.
Correct. And the cloud business has been defined as being disappointing, witnessing growth of 22%. That cloud business is going to accelerate in 2024. I think it's a very important exercise to think about the Mag 7 and tactically understand where you're actually going to see the outperformance in the upcoming year. I agree with this call when you look at Alphabet relative, certainly, to Apple. And by the way, Apple has been the underperformer of the Mag 7 so far year to date. It's up 48%. All right, it's up 48%, but it's the underperformer of the Mag 7. If I look at the 2024, I see Apple underperforming once again. But I like the position that Alphabet is in, as long as you tell me, again, I go back to what I said before, the economy holds in. We don't see the deceleration, because if we see the deceleration, I have to worry about ad spending at that point. Otherwise, ad spending is going to be strong in a year where you have a presidential election and the Olympics. I like what they did in the acknowledgement, at least, of artificial intelligence not being where they wanted it to be relative to Microsoft. And I think Alphabet has the clear potential to be a leader in the Mag 7. And lastly, the last several years, they've been buying back stock. They're actually implementing the Apple and Microsoft strategy. If they continue to do that, I think this is an obvious name that you want to continue to own as a core holding.
Weiss, you own it as well. And Barron's is not naive to the fact that, they suggest the company was caught off guard by Microsoft related to AI, but that it quickly regrouped. And if there wasn't a perception that they were still going to be a player and a major one, the stock wouldn't have done what it has for this year, too, which is no slouch either. It's right up there with Microsoft. On a day, by the way, where there's reports and we're talking about OpenAI having a valuation of $100 billion.
Yeah. Look, very few companies have a product that becomes a habit, that are habit forming. We had cigarettes and that wasn't good for you, but we've got Google. And that's habit forming. Where else do you go? You go to Chrome, you go to Google. They've got a massive installed base when you take a look at their operating system.
Yeah, but the whole point, though, of the skepticism is that, yes, where do you go?
Right.
You always did go. The question is, are you going to continue to go?
But here's my point. For all the hoopla about AI that we've seen, it's not really prime time ready. So Microsoft came out earlier.
Chat is.
Well, Chat is, but not really. If you take a look at Chat, I mean, it's usable, but it's not where it should be, where you're going to rely on it all the time. Right now, I'd say it's more than intellectual curiosity. So my point is, when you have a habit from a company that's a habit, that is not a startup where they can be put out of business by Microsoft. What it does do, it gives them a lot of runway to catch up, and they can catch it up. And by the way, Meta's not the only company that got more efficient over the last year. So did Alphabet, very efficient. They got rid of a lot of vanity projects. They decided where they're spending their capital. They are buying back stock. So that's why I own it. To me, you've got regulatory issues, but those same regulatory issues are facing Microsoft, they're facing Apple, they're facing Meta. So
these guys don't care about any of that. They're like, yeah, well, the regulatory issues may be there, but Alphabet might be worth more broken up anyway.
Exactly. And that's always, that remains to be seen, but that's going to keep the bid under the stock. And why, when they lost that lawsuit for last week or the week before about the App Store for gaming, the stock didn't budge. I was kind of surprised at that. I thought there'd be a short-term opportunity to buy more, but I never got it.
Yeah. Jim Lebenthal, you own this too.
It's actually my biggest tech holding, Scott. And, apropos of our earlier discussion, I think this is a stock you can buy right now. That's my opinion, based on also an opinion that the market has held this stock back still on the belief that Microsoft is going to eat Alphabet's lunch. I think that's kind of Brad Gerstner's position. I think that's a mistake for the reasons that Steve was just laying out there. And, as Joe was pointing out, unless things really fall off a cliff, the advertising business is going to be good. The web services are going to be good. This multiple is about 2/3, maybe 70% that of Microsoft. I think that's a bargain. I don't think it should be at a discount to Microsoft.
Bryn, you don't like it. Why?
Well, I mean, not that I don't like it. We all use it. But I think Joe
You
did a
don't own it.
wonderful job. Right.
You own
But I
a lot of
think
these. You own a lot of tech, but you don't own this one.
Yeah, exactly. And so I think Joe did a great job on the thesis. So my question is, well, why is it still at a 20 multiple? And when I look at it and take a step back, the two big things is 90% of the revenues are ads. 9% of the revenues are Google Cloud, and it's barely profitable, but it's 25% of the employees. And Steve, I agree, they cut back on a few things, maybe like massages every week. But to me, when I look at these companies that are executing, when I look at NVIDIA, when I look at even Apple, when I look at Microsoft, Meta, you know what you have? You have visionaries, and Satya is not a founder, right? Satya was the third one in, past Bill Gates. You have visionaries that are executing, and to me, okay, I don't own the stock, but I follow it, I read the report. It seems like they just don't have that come together where we are going to do one thing or two things very well. And it seems that to me, the whole thing about OpenAI, I mean, they bought DeepMind forever ago. And so to say that they were flat-footed makes no sense. To me, they're trying to be like a fast follower now and trying to catch up, because I don't think they have that leadership from the top that allows them to actually have strong multiple expansion. And I think that leadership is one of the reasons it still has a 20 PE.